Dow drops more than 600 points in worst decline of 2022 as Russia-Ukraine tensions worry investors. That is the breaking news that is coming out right now. You are seeing the futures, the SPY, everything in after hours is taking another hit to the downside. You have the geopolitical tensions, like we just said, but you also have Fed Bullard says, in quotes, inflation could get out of control, so action is needed now. This is all coming together at a very bad time for the markets, and we are heading down lower. Are we going to see a crash tomorrow? What does this mean for AMC? Because like I've said pretty much every single day now, you need to see the markets coming down to see the MOS, as liquidity is restricted. When AMC does start to rally, that's when you see the MOS, that's when you see the forced liquidations and the margin calls coming. If the markets are at all-time highs like they have been over the past year, it is very, very hard to see hedge funds by and large getting margin called. So we are going to dive into this whole situation. I hope you guys are excited. There is a lot of opportunity. You can almost smell it out there. Not like young Biden. You can smell the opportunity in the stock market, baby. Now, let's not get political. Let's dive into this video. If you guys are new to the channel, my name is TCI. Thank you guys for tuning in. We cover all and any news, anything that happens in the markets, geopolitical, anything that's going to move the markets and move AMC, because that is the ultimate goal here, to cause the MOS, to get the MOS started and ultimately make a lot of money. But at the same time, we like to focus on trades, other things as well that will make you money. So if that's something you want to be a part of, hit that subscribe button. If you guys want to go a little bit deeper with it, I'm sure you guys heard the Discord going off. Check out the pinned comment down below. We have been killing it over there, protecting our portfolios, making some money as the portfolios go down, essentially hedging them out. If you want to be a part of it, like I said, link down below in the pinned comment. Go ahead, get yourself some free stock as well. Moo, Weeble, and Public down below in the description of this video. So diving straight into it, like it says up here, Russia-Ukraine tensions worry investors. Now, there has been a lot of back and forth mortaring and missiles fired at schools and all of this against a region in Ukraine that is a separatist region that is essentially basically Russian troops that go into Ukraine, act as citizens, and fight the Ukrainian government, right? This has been happening since 2014. They back Moscow, and Moscow helps them, and then they fight Ukraine. So you're seeing a lot of that back and forth. There was rumors that Ukraine and Russia have been like mortaring each other back and forth, but that is not true. It's the separatist, really Russian people in this section of Ukraine that have been taking mortars and sending them back and forth, and you know, some of those actually did hit a school today, so that's why you did see the market selling off. It looks like you're getting very close to seeing a potential invasion. I am still in the camp of I am not fully buying this whole thing. I don't necessarily think that is going to happen. Russia does not have enough to gain by invading Ukraine. I could totally be wrong, and that could change here in 5 minutes or so. That's the landscape we are in, so don't take my word directly, but deep down, I don't think there is enough reasoning to attack Ukraine unless Ukraine keeps firing mortars at potentially Russian citizens, right? That could definitely cause it. But other than that, I don't see a reason for that to happen. And I do have some trades on that, like oil, which we will talk about here in a minute, but I don't think this is the time to YOLO. This is not your lottery ticket. I wouldn't count on this happening. If it does, not a bad idea to have some kind of protection nevertheless. But as far as what really started to move the markets and what really sent the markets down, and the markets are just cratering here in the after hours as well, but it was during this period right here. That's where you started to see this slope down in the markets, and that was Fed Bullard. As we do know, everything revolves around the Fed. The Fed props the markets up, they take the markets down essentially when they want to. And like we already read, Fed Bullard says inflation could get out of control, so action is needed now. The key points: St. Louis Federal Reserve President James Bullard cautioned that without any action on interest rates, inflation could become an even more serious problem. Quote, "We are at more risk now than we've been in a generation that this could get out of control," he said during a panel talk at Columbia University. Bullard has called for a full percentage point in rate hikes by July. And I agree with him. I think this guy actually has some common sense. And like he said, back in 2014, 2015, after the great financial crisis in 2008, he said that he was on the dovish side. He didn't even feel a need to raise rates because inflation was so low and they were actually struggling to keep around 2% inflation. And now he's totally the opposite. So at the Fed, you have some people that just are stuck in a way. They're either dovish or hawkish. Fed Bullard, or James Bullard, he actually finds reason to be a certain way. And like I said, 2014, 2015, he was dovish. He didn't find a need to raise interest rates aggressively as they did, which ultimately caused the markets to sell off at the end of that tightening cycle in 2018 and 2019. He was dovish. Now he's hawkish. And this is one guy, if anybody, that you can kind of count on to help the markets out. Now, this is two fronts. If you're like me and you have other stocks in your portfolio, then this guy's going to cause you some short-term pain and long-term prosperity instead of what Fed Powell is doing, trying to soft landing everything and then have to crush your portfolios later down the line. I would rather get it over with here shortly and then get the gains hopefully later in the year. But nevertheless, that is what caused the markets to come down. Hopefully James Bullard could talk some sense into the Fed and essentially crush the markets, crush inflation, give us the MOAS even sooner. So that's something I will be watching. All of his comments, I mean, the markets watch that and react to that as soon as they come out. The algorithms, they're always scanning for what he has to say. Now, as far as specifically what is going on with AMC and what happened for the day, to get some context behind what we are seeing with the price action, which we were down, let's take a look at AMC. We were down about 3.71%, and after hours down or up 0.05%. The markets took a major hit. The NASDAQ was down almost 3%. 2.88%. The Russell 2000 was down 2.46%. So this is not too crazy, and it in my opinion is showing strength within AMC. The fact we did not crumble, and yes, we were down for parts of the day at about 1847 was the low, and it's good we stayed above this line that I have had drawn out for a while now. So that looks good. We've seen a stronger recovery. But nevertheless, AMC is holding a lot of strength in my personal opinion. And AMC was actually up for a majority of the day and was actually positive on the day. So do keep that in mind. But as far as what the institutional investors are doing, shit, I gotta log back in. Why are they doing me like that? Why are they doing me like that? Come on, Ortex. Let's, hopefully it doesn't lag too much, but let's go to the option flow. And that's what I really like to pay attention to. And you've seen still for the day, 50% positive order value, 22 orders totaling $4.16 million. Yesterday was 64% bullish. 1 week, over the past week, it has been 58% bullish. So even on a day that we dropped, you've still seen positive order value of 50%. And there is a lot of other smaller stocks that are just going crazy. I think it's ANGH is one that went crazy. There's so many of them that had these weird rallies throughout the day, and I think that did take some attention away from AMC because lately AMC has been stealing the show. Now, as far as Ortex and the short interest, you're looking at 20.99% short interest of free float, 107.74 million shares that are sold short, cost to borrow max at 2.32%, yet you're not seeing the utilization coming down at all. Still another very, very bullish sign. If the cost to borrow max even goes to say 10% and the utilization stays at 100%, that is music to my ears. I would love to see that, and I personally think that would happen. Why is that good? Because if you can get a guaranteed 10% return by lending out these shares, why would you not do that? Well, you wouldn't do that if you thought the stock was going to go higher. So if the utilization stays at 100% and the cost to borrow keeps going up, that means that people are not willing to lend out their stock for that cost to borrow. And obviously at 2.32%, they're not lending out literally any shares of AMC, because why would you when the stock's been on a rally and even holding up strength on the worst day in 2022? AMC was only down 3%. Why not hold on to that stock and wait for the massive rally? Days to cover is at 2.38, so it's also very hard for shorts to get out of their short position. So all of that is looking very, very good. As far as the rate hike basically expectations from the markets, you're looking at 0.25% is 66.3% of market participants. So that looks to be what is likely going to happen. If we start to see that flip to this right here, the 0.5%, then the markets may take another move to the downside. Now, as far as earnings that are coming out, you've seen Roku in after hours, Dropbox, and Redfin. Those are going to be the big ones. Redfin got clapped, Roku got clapped, and I believe Dropbox also got clapped. Let's go ahead, because this is going to kind of set the precedent for what to expect tomorrow, down about 2%. So not all too terrible, but Roku and Redfin definitely took a major hit. So I would watch for that. Tomorrow before market opens, you have DraftKings and John Deere. Those are going to be the two that people really pay attention to, specifically DraftKings with the Super Bowl. I do, full disclaimer, own about 200 shares of DraftKings, so I did not trade that because I have a lot of exposure to the upside and I am down a lot on that stock. Save the portfolio, pray for the portfolio. It is not looking so hot at the current moment. Now, you also do have Fed Mester that is speaking later on tonight, and that's going to be very interesting. If he has some contradicting things to say compared to James Bullard, he does lean to the dovish side, so that'll be interesting. If he does start to sound a little more hawkish, then you could see that sell off in the futures later on today. At the same time as that, if you see Russia, invade Ukraine, obviously we're going to see a major, massive down day on that. But even if the tensions continue to rise, you could also see a pretty substantial red day tomorrow heading into the weekend, and we are closed on Monday. The Olympics end on Sunday. Don't quote me on that. I believe on Sunday, if not Saturday. So if the markets are closed on Monday, you're going to have to finalize your trades and hope that Russia either does or doesn't invade. And that sounds bad. Also, don't quote me on that. I do not want war. I don't think it's going to happen. War is never good. I'm speaking about investing terms, right? Depending on if you're playing oil, if you're not, if you're shorting stocks, if you're going long on stocks. It's all going to come down to the Russia situation. Now, as far as the max pain, you're looking at $19 by the end of the week, by tomorrow, which is very possible if we do see a green day tomorrow. I don't really see how that is possible at this current moment, but nevertheless, we've seen weirder things happen over the past 2 years. But you are looking at 29,000 calls that are in the money, 292,000 calls that are out of the money. So again, if you do see that move to the upside, you could see a mega bounce. That's what I like to call a Thursday or Friday big move, like 15 or 20% positive, due to the option chain and the calls, a lot of them running into the money with very little days to expiration. That consists of pretty much instant hedging by the market makers because there's no days left to expiration. It's like buying a weekly for $5 and it turns into $500 because there's no days left to expiration, and those contracts, they either go to nothing or they can go crazy. And that hedging has to happen by the market makers. As far as the put side, in the money puts at 46,000, out of the money puts at 111,000. So again, there is a decent amount of puts that are in the money. If the stock goes up, that is also buying power that has to come in by the market makers to de-hedge their short positions to oblige for those puts. So that's really what you guys do need to know. As far as everything else, just watch for oil, watch for Russia tensions. Make sure you guys have your ducks in a row heading into the weekend. If there is going to be a Russian invasion, it's likely going to happen over this weekend. If it does not, it is probably not going to happen. I still, like I said, I don't think it's going to happen, but to have a little bit of insurance on your portfolio, never a bad move. But yet again, I am not a financial advisor, so do what you guys want to do. Everybody's situation is a little bit different. Now, a brief look at the technicals and where we currently sit, right? So I have had these lines drawn for a while now. I have not changed any of them, and we are well above this floor level since this rally has started at about $18 per share, and we did close above that, so that's looking very good. We also did close above $18.50, and that is this next really this support level. We're just bobbing up and down, so it's kind of a support, could turn into a resistance, but we did close above that, so that is also looking really good. And on the 4-hour candlestick chart, you are also right at the 20-day simple moving average, slightly under that, including after hours. You might be right on that. and that's also the level that I will be watching for heading into tomorrow's close. Might make a trade on AMC, might not. If you guys want access to all of my trades in real time, as well as join a great trading community, I'm sure you guys heard all of the alerts going on in the background. Link for that in the pinned comment down below. Go ahead, get yourself some free stock. It's literally free money. Worst case scenario, you get some free money. So free money is always good, and I will always help you guys get as much of that as possible. So thank you guys for tuning in. I hope you guys enjoy the rest of your night, and I will see you later on tonight on the live stream.